Hi guys, this is a quick video to let you know about some updates on financial markets, on our portfolio, on what is happening out there. This is a week with a lot of earnings reports, and I looked at a lot of earnings reports from my favorite companies I own in my portfolio, but also some companies I would like to buy at a certain price. The US economy is very strong, I would say. Very strong, and inflation is very sticky. That means that a lot of good companies are generating a lot of profits, a lot of cash flow, and at the same time, you have strong inflation. So you can expect high commodity prices, I suppose, for the rest of the year, but I don't really know. This is just my feeling. We will see what happens. But most of the companies I own in my public portfolio are delivering very strong earnings. Most of the Magnificent Seven are delivering magnificent earnings. And yesterday, Microsoft and Google released their earnings for Q1 2024, and it was wonderful. Magnificent revenue growth, earnings growth, some buyback program, some dividend payments. Things are going well. There are a lot of ads on YouTube, and there are a lot of money in Google's pockets. So things are good for the Magnificent Seven. The valuation are, I would say, fairly expensive. And I still hear people that say the Magnificent Seven are too big and they are maybe 25% of the whole market, the whole S&P 500. But also, I would say 25% of the S&P 500 earnings come from these companies. So these are, yes, the biggest companies in the index, and they are clearly moving the market, the whole market as a whole. But these are the companies that deliver the best earnings. So if I have to talk about the current market right now, if you look at the S&P 500, you have a P ratio of 27, 25 to 27, something like this. Some companies are trading at the market average with a P ratio of 25, and some companies are trading at a higher valuation because it's better quality, higher quality, like Microsoft. I think Google is trading at P of between 25 and 30, something like this. And for the rest of the market, you have all the opportunities that are trading at very cheap valuation. Businesses that are not sexy at all, businesses that no one likes, and businesses that are trading at valuation of a P of 6, 7. Strangely, I'm interested in investing in these kind of situations. Stocks that are trading at a P of 6 but are decent business. These are not lower quality businesses. It's just that at the moment they are hated. At the moment, it's not their best years. That's what I'm interested in at the moment. I see some good opportunities. I see, for example, car dealerships, US car dealerships that are decent companies with good fundamentals that have grown their revenue, earnings per share double digits, and their stock is trading at a P of 6, P of 7. And I think that these are good risk reward opportunities. Maybe I will start buying more in this sector. And right now I'm identifying some opportunities, but I see big investors like Monish Pabrai, like Greg Alexander, like David Abrams, big gurus that invest in these car dealerships. If these big gurus are interested in buying these car dealerships, if these businesses are decent businesses, good fundamentals, and trading at a P of 7, this is definitely something to look at, especially when you compare these opportunities with the rest of the market with a P ratio of 25, 30. So on a relative basis, you can say these are deals. About these car dealerships, you have several players. You have Asbury Automotive Group, you have Penske, you have Group 1 Automobile, AutoNation, Lithia Motors, all these big players, maybe I would say 5 or 6 big players. This is a fragmented market, and these big players have different strategies. One strategy that I like a lot is the strategy of Asbury Automotive Group. Ticker symbol is ABG, which has delivered a beautiful 20% plus earnings per share CAGR. So they have grown their earnings per share for more than 20% annually for the last decade. Wonderful results. And they have a buyback plan, they have some M&A plan, they are delivering good results, operations are very good. And I would say that the other company I like a lot in this sector is AutoNation. The ticker symbol is AN. What is very interesting with AutoNation is the quality of capital allocation. I'm a fan of buyback machines. I'm a fan of company that consistently over the years they use maybe all their earnings, all the cash flow at the end of the year to buy back their stock because the stock is trading cheap. And when you look at earnings calls for AutoNation, you see that management is explaining capital allocation and explaining buybacks in a way that is very interesting. They say publicly that they look at the different opportunities they have in front of them. Okay, they can do an acquisition, M&A, that would yield a 10% return. Okay, they can do some dividends, they can pay some debt, and they compare the yield of these investments. And right now, the stock is trading at a P of 7. That means earnings yield of 14%, sorry. And they say, okay, we have an M&A opportunity that will yield 10% here, and we can buy back our stock at 14%. We compare the yield, 14 is superior. Let's go all in on buybacks. What is great with AutoNation is that at the same time that they have this good disciplined capital allocation strategy, they have strong operations that are running, that are generating a lot of cash. They reported earning this morning and they said cash generation is excellent. Okay, that's the first step. You have your cash at the end of the year. What do you do with the cash? Well, management is strong with it. We will optimize the yield, and if buybacks with a P of 7, if buybacks can yield a 14% ROIC, return on invested capital, we will do buybacks. And they say, you know what? We already had a buyback program. We will add more buybacks to it. So the market cap right now is $7 billion, I would say. And they said they will increase the buyback program of 1 billion. That means 14% of the company, something like this. And if they think that their stock is undervalued, if they think that with a P of 7, it can yield a 14% return on invested capital, it is very likely that they will continue to do this buyback program. For example, I think in 2020 or 2021, 2022, 2 years in a row, they bought back 15% of their stock, 15% of their stock again. So they definitely can buy back 14% of their stock in 1 year. Correction, it's 25% of share reduction in 2021 and 25% again in 2022. And they show very strong discipline in their capital allocation. So I do not worry for them, and it got me interested. That's something that I'm analyzing right now. This is not financial advice or a recommendation of any sort. I'm just sharing what is happening right now, and with markets that are almost at all-time high, with big tech companies that are expensive, it's very difficult to find good opportunities. And when I see these unsexy businesses that do anything to do buybacks, to capitalize on cheap debt, to manage operations very well, and I see that these are businesses that are trading at the P of 6, 7, I like it. I like it. Maybe the valuation will not evolve from there. Maybe the P ratio will stay at 7 or go to 8 or 9. I don't mind this. If they can continue to do buybacks like this, that's even a better scenario, because as a long-term shareholder, I love when companies take advantage of cheap valuation and do buybacks. And they buy back 50% of their total shares, 60, 70% of their total shares. I think in the case of AutoNation, they bought back 80% of their shares in 20 years, something like this. That's some crazy results. And management is aware of this. That's part of their strategy, and I think they will continue like this. So you have some good opportunities in the market. When you watch CNBC, you see everybody talking about Google, Nvidia, Tesla, sexy businesses. But you can have other opportunities in the market right now. And these companies, these car dealerships are opportunities. The other stock that I'm considering right now, and that is on my watch list, has been on my watch list for a few months now, is Games Workshop, the UK-based company that builds Warhammer toys. It's a wonderful business, growing nicely, and I think the earnings report will be out in 5 days, like a semi-annual report, I think. Yes. And they have been delivering good results. They see strong demand. They are, I would say, in a monopoly with these toys. They have branding. They have good operations with only 3 sites where they create these toys. Should I say toys? Maybe soldiers, because that's figurines. That's a great business. And the market values this company right now. I think you have a P ratio of 22, 23, something like this. So definitely not very expensive, not definitely not cheap, but I would say reasonably priced. So these were the companies that I'm looking at right now, and I'm planning, if it drops more, to buy more Evolution Gaming. This is a company that I have been following for a few months now, a few years actually. And I've bought my first shares of Evolution Gaming in December 2023. Liked the business, did more due diligence, and I like it even better now. So we will see. If the price drops, I might buy more. It depends of the market situation. It doesn't depend on me. I'm just here and waiting for prices to drop so I can buy when it's cheap. I'm just patient, and this strategy has been working for years, and I will continue to do this strategy of patiently waiting for a good price. This is a strategy that came from Warren Buffett. And by the way, next week I'm going to Omaha, Nebraska, for the Warren Buffett's annual meeting, Berkshire Hathaway's annual meeting. So I don't think there will be some videos next week, because I will be quite busy listening to the Oracle of Omaha. There will be plenty of good investors, good gurus, and this will be an opportunity to ask some good questions, have some good stock ideas, share ideas with real professionals, seasoned investors. It's a learning experience. It's a pilgrimage, and it's definitely a learning experience. And that's it for today. By the way, I have a paid program. This is a top link in description.